Hey, this is Matt from InvestiQuant. Today is Thursday, October 7, 2021. This morning, the markets gapped up and we have taken off to the upside since. We are consolidating up near the highs of the session here as we move towards that non-farm payrolls number that's going to be out tomorrow morning at 8:30 a.m. Eastern time. So what we're going to do this afternoon is take a look at what has happened when you're seeing some strength ahead of that number. Let me go ahead and set that up in Discover. We'll grab all four instruments. The setup's going to be based upon entering the market long at 3 p.m. Eastern time, exiting at 4:15 p.m. Eastern time. Now, for this study, all we're going to be looking at is a market that is trading up near the highs of the day at 3 o'clock when the NFP number is out in the morning. So to do that, I'm going to go into post-open filters, and I'm just going to say that the price at 3 o'clock is in the top 25% of the intraday range. So if I come here, select equals next to close in top 25% of the intraday range. That means the 3 o'clock price is in the top quartile of the range. Next, I'm going to put it in at least a bullish market environment that's above a 200-day simple moving average. And I'm just going to use the 200 because sample sizes will get a little bit thin if I do above a 10 or below a 10 and above a 200. So I want to keep as many samples as possible, seeing that this day only happens once a month. And I've got a little extra context there around a strong finish to the day. All right, so lastly, the market events library. I'm going to grab day before non-farm payrolls from the day before events library here, and I'm going to hit equals right there. Day before non-farm payrolls report. You can see it's been added to the test. Now I can click view results. All right, here we go. These are the results based upon entering the market long at 3 p.m. Eastern time, exiting at 4:15 p.m. Eastern time. When tomorrow is non-farm payrolls report, you're above a 200-day simple moving average, and at 3 o'clock, you are trading in the top 25% of the intraday range. Historically, this pattern has 63 samples in the S&P, 59 in the NASDAQ, 54 in the Dow, and 54 in the Russell as well. Win rates on these are mostly favored here, with S&P coming in at 59%, NASDAQ at 66%, Dow 63%, and Russell 67%. So all four of them are better than 50%, and three of the four north of 60%. If we look at the average moves, you'll see the average win is larger than the average loss for the S&P. That is also the case for the other instruments as well, that NASDAQ has a sizably larger average win compared to its average loss. The Dow has a larger average win, as does the Russell. So historically speaking, this pattern has favored more upside into the close the day ahead of non-farm payrolls. Hopefully you found that helpful. Good luck the rest of the day, and we will see you next time.